So we're going to start with this chapter, marginal cost, where we're going to do income statement under both absorption costing and marginal costing. Under absorption costing, actually, we take the total cost into account while calculating the closing inventory, and where, as you can see, cost of production divided by units manufactured multiplied by closing inventory. But in marginal costing, when we value the closing inventory, it is only the marginal cost that is being considered. So when you'll be asked to do income statement under both absorption and marginal costing, everything will be same. Only the difference will be the value of closing inventory, because under absorption costing, it is the total cost of production that will be considered, whereas in marginal costing, it is the marginal cost, that is variable cost. Marginal cost means the variable cost, and variable cost means that varies with the level of output, and fixed cost that varies with the level of production. So first of all, to see this question, there are 96 bicycles per day that is being produced. That means there are 5 days a week and 50 weeks. That means in total 5 days multiplied by 50 multiplied by 96. That means 24,000 bicycles are being produced. Direct material is 132,000 per cycle. Direct labor is 1 hour 30 minutes work per cycle at a wage rate of 9.4. That means for every bicycle, it is 1.5 hours multiplied by wage rate is 9.4. That is 14.1. Fixed overhead 14,800 per month. That means there are 12 months. 14,800 multiplied by 12. Sales unit is 22,800. So if you calculate sales, 22,800 multiplied by obviously 24,000. Then selling price, sorry, 22,800 is sales multiplied by 300. That will be the total sales. And semi-variable, that means a fixed element, a fixed cost element is there, and also variable cost. For example, 7,000 fixed element, that means 7,000 into 12, plus 21 per bicycle, that is 21 multiplied by the production, that is 24,000. So now you are asked to show a profit and loss under absorption and both marginal. As I said, almost everything will be same. So let's start with absorption. So sales is, as you can see, 22,800 per year, 300. So let's 22,800 multiplied by 300. So how much it comes? 22,800 multiplied by 300. So 684. 684 million. 1, 2, 3, 4. So I hope it's clear. Now, opening inventory of finished goods. Is there any opening inventory? It's year 1. So opening inventory will be 0. Now, cost of production is calculated direct material plus direct labor plus fixed cost. That will the total variable cost or marginal cost. With that, fixed cost need to be added to get cost of production. So let's start with direct materials. It said 132 per bicycle. So 132 multiplied by, we've already seen 24,000 cycle per year. So 132 multiplied by 24,000, 3168 million, 3168 million. Okay, now direct labor, we've already calculated 14.1, 1.5 into 9.4. It is also per bicycle. So 14.1 multiplied by 24,000. 14.1 multiplied by 24,000 24,000. That's 338400. And in the fixed overheads, it is a factor of its variable part, that is 21 per bicycle. That is 21 multiplied by 24,000. So let's see how much it comes. 24,000 multiplied by 21. That's 5,04,000. 500, 504,000. So these all are actually these three: direct material plus direct labor plus variable fixed overheads is total marginal cost or total variable cost, the same thing. 338,400 plus 24,000. How much? Oh, I think 10. 316,800, 316,800 plus 338,400 plus 5,04,000. That is 401.400, 400. That is 401,400 is the total variable cost. Now we have to get to the fixed cost. Fixed cost is over here 22,800 as it's 14,800 per month. 14,800 multiplied by per month, so it's 12 plus it's also 700 fixed element per month. That is 7,000 multiplied by 12. So how much it comes? 14,800 total fixed element is 261,600. We already got it. Now the total cost of production is marginal cost plus fixed cost 216,000. So it's coming 401,400 plus 261,600. 4272,000. Now we have to value the closing inventory. So everything will be same. So let me copy and paste this table, the marginal costing, because till this point, everything will be same. To save time, under marginal costing, it will be under marginal costing. It will be marginal cost. MARGINAL, marginal cost. So we'll come to that later. Now it said you have to find out the value of the closing inventory in units. It is easy to find out. You have produced 94,000 bicycles, but 22,800 has been sold. The closing inventory is, let me do it working. There is no opening inventory. So 24,000 minus 22,800. It's coming 24,000 minus 22,800. That is 1,200 units or bicycles is the closing inventory. So let's value it. So closing inventory. What is the cost of production? 4,272,000 divided by number of units manufactured. So we're actually making an average cost, the unit cost or the cost per unit multiplied by the 1,200 closing inventory units. That will give me the value of closing inventory under absorption costing 427200 divided by 24,000 multiplied by 1200. That is 213,600. So it should be deducted. So let me put it in brackets. So minus 000. That is cost of sales is 4058. So we got opening inventory 0. So for the cost of production, we have to deduct the closing inventory to find out the value of the value of the cost of sales, the value of cost of sales 4058 400. So it should be deducted. Six eight four. So it's coming with the gross profit is from the revenue. We have to deduct total cost of sales to get gross profit 278,1600. So that's the gross profit under absorption costing, and under marginal is same, almost just the closing inventory value will change. Now to take the marginal cost, we have already calculated marginal cost, that is the total variable cost for 4010400. So over here total marginal 4010400 divided by units manufactured, same thing, 24,000 multiplied by 1200, the units of closing inventory. So that will give me the value of closing inventory under marginal cost. So 4010400 divided by 24,000 multiplied by 1200. That is giving me closing inventory 200520. So minus 4272200. So total cost of sales is 4071480. That we got cost of production minus closing inventory. We don't have any value of operating inventory. So this cost of sales now should be deducted from total sales to give me the gross profit under marginal cost of 684 million. 2768520. So I hope it's clear. Still, if you're not clear, you can ask for a live explanation. Thank you very much.